Hello and welcome back to More Coin Bureau. My name is Guy and do you know what? You've heard quite enough from me recently, so I'm going to let our newest presenter, Lewis, take you through this one. Lewis, the floor is yours.
Thanks, Guy. And hey, everyone. It's great to be here. Everybody wants to know where the smart money is going into crypto. After all, understanding how these wealthy individuals and institutional investors are allocating could be the key to you becoming a wealthy investor yourself.
I'm rich. Oh!
Luckily, a new report reveals exactly where the smart money has been going. So, whether you're buying crypto for the first time or already knee-deep in DeFi, this is a video you can't afford to miss. My name is Lewis, and I'm happy to be here and share more crypto knowledge to you as a new member of the Coin Bureau team. The report that we'll be summarizing for you today comes from CoinShares, and it's titled, quote, "Affluent Individuals and Crypto, What Do They Really Want?" We'll leave a link to the full report in the description if you're interested. Now, the report begins by examining the various categories of crypto investors. It specifies that, quote, "These personas reflect varying levels of experience, risk tolerance, and reliance on advisors, helping to map where each group sits among the adoption curve." 21% of investors are described as crypto curious, those that don't yet know anything about crypto but are warming up to the idea. Meanwhile, 38% are cautiously confident, having already invested in crypto but in a measured, risk-aware way. And 37% are fully committed crypto investors, showing enthusiasm and confidence in the asset class. Of the 21% who are identified as crypto curious, 53% were classed as high net worth, as in those with a net worth of over $1 million. While 47% were classed as sub-high net worth, which was having a worth between $500,000 and $1 million. The report then looks at the key traits of these crypto-curious investors. These are the people who are less comfortable with volatility and decision-making and prefer financial advisors to make trades for them, although half of advisors don't recommend investing in crypto. Crypto-curious investors also spend less time researching than they do checking their portfolios. Notably, they're also less interested in altcoins and are neutral on increasing crypto regulation, which makes sense. Chances are that they don't understand what's been going on with crypto regulations and why it matters. Crypto-curious investors also prefer video tutorials for learning and say that access to experience is limited. Well, it is if you know where to look. Next up are the cautiously confident, those who are already in crypto but with their guard up. In this cohort, 51% were classed as high net worth, while 49% were sub-high net worth. The key traits of cautiously confident crypto investors are that they're somewhat comfortable with crypto's volatility and making their own investment decisions, but are still more advisor dependent. They usually check their portfolio a few times a week or fewer and prefer indirect crypto exposure. They prefer this via traditional platforms. They're also somewhat supportive of crypto regulations. As for staying informed, the cautiously confident say that education is good rather than excellent and will trust their advisors more when they can also offer education. Then there's the committed crypto investors, who are actively looking to expand their positions. 53% of these guys are high net worth, while 47% are sub-high net worth. Committed crypto investors are extremely comfortable with volatility and usually make their own investment decisions independently. These chads know how to embrace the chaos. I mean, it's all part of the fun, right? Committed crypto investors are more likely to actively seek advisors with crypto experience and will check their portfolios at least once per day. They prefer crypto exposure through direct ownership or DeFi and staking protocols and strongly support crypto regulation. The committed also prefer to stay educated through podcasts, audiobooks, and community insights, and believe that advisors should teach investors about blockchain, risk, and emerging opportunities, and they would be happy to pay a premium fee for such a service. By the way, if you're enjoying the video so far, then be sure to smash that like button and subscribe to the channel and ping that notification bell so that you don't miss the next one. Now, the next part of the report looks at the confidence and interest of affluent crypto investors. Generally speaking, investors are enthusiastically embracing crypto, with 9 in 10 investors saying that they're likely to increase their exposure in 2025. Specifically, 44% of respondents said that they were likely to increase their crypto exposure, while 45% said that they're extremely likely. Nice. Oh, and if you're looking to do the same, then you can optimize your crypto investing with the Coin Bureau Deals page. That's where you'll find sign-up bonuses for up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. These deals won't be around forever, so take advantage of them while you still can, using the link in the description below or the QR code on the screen. But back to the report. Respondents were asked about which cryptos they were most interested in, and of course, it was Bitcoin that came out on top. What might surprise you, though, is that just 56% named Bitcoin as an asset that they're interested in investing in, which suggests that many don't see BTC's current price range as an attractive entry point. Not only that, but 32% said that they're interested in NFTs and tokenized assets, while 30% named ETH specifically. However, only 23% said altcoins more broadly, suggesting that investors are only focused on particular narratives rather than altcoins as an asset class. Similarly, 17% said DeFi tokens were an area of interest. We happen to think that DeFi tokens could perform better than many other people actually expect, and you could see our top 5 DeFi crypto picks by checking out our most recent video right over there. Anyway, the report then states that, quote, investor interest in digital assets remains strong, even among those with no exposure. In fact, 75% of respondents were either interested in learning more about crypto or investing in crypto in the near future. Specifically, 53% are interested in learning more, while 22% were planning to invest in crypto soon. The remaining 25% said that they're simply not interested in digital assets, but I guess you just can't win them all. The report also notes that sub-high net worth investors are significantly more likely to invest in crypto in the near future than high net worth investors, which again makes sense. The wealthier you are, the less risk you tend to take because you're already getting lots of rewards. As for investors who are already actively investing in crypto, the report notes that 89% check their portfolios or place a trade a few times a week. In fact, 51% said that they check or trade their crypto at least once a day, while 38% said that they do this a few times a week. Investors were then asked about their main reasons for investing in crypto, and the answers are surprisingly well balanced. 26% cited crypto's high return potential, while 19% noted its long-term capital appreciation. 18% cited an interest in the technology, 16% said portfolio diversification, with 9% viewing crypto as a hedge against inflation and macroeconomic uncertainty. The report also notes that 54% of respondents currently not holding crypto are most attracted by portfolio diversification, while 39% are attracted to the potential for long-term gains. This suggests that more and more investors are seeing crypto as a legitimate investment rather than a speculative bubble. Next, the report notes that security risks and regulatory uncertainty are the top challenges for those considering crypto. 54% said that their biggest obstacle was potential security risks like hacks and fraud, while 52% said that it was regulatory uncertainty. 51% said that crypto's volatility is a challenge, as are measuring the value of digital assets. 49% said their biggest challenge was a lack of investor protection, and 45% said it was crypto's environmental impact. However, it's crypto's speculative nature and the potential for criminal activity that's causing the most hesitation. 49% still view it as a speculative asset lacking cash flow, dividends, or interest, while 45% express concerns about scams. Additionally, 40% find crypto harder to invest in than stocks, and 28% hold negative perceptions of crypto and the crypto market. Bizarrely, though, 27% said that they don't believe crypto can actually offer better returns than traditional assets. It seems that they missed the memo when Bitcoin is literally the best performing asset of all time. Just consider that the S&P 500 has gone up 4% since the start of the year and 12% in the last 12 months, while Bitcoin has risen by 15% this year and has rocketed 76% in the last 12 months. I mean, just saying. Anyway, moving on. The next part of the report looks at the comfort levels of investors when it comes to decision making. 45% said that they're very comfortable making decisions about crypto independently, while 42% said that they're somewhat comfortable. Notably, 48% of investors said that their decisions are influenced by major price movements or market trends, suggesting that smart money isn't any more rational than retail. Then again, 47% attributed their decisions to economic factors, and 46% said that their decisions were influenced by technical analysis and trading indicators, which is a bit smarter, at least some would say. 1 in 4 investors also said that their decisions were strongly influenced by their own research, while 55% said that they spend several days or more researching digital assets before they make an investment decision. And if you're wondering how you can master the art of DYOR yourself, then good news. You can learn everything that you need to know by checking out the video right here. But back to the report. Investors were asked what is the most important factor and what are the most important factors when evaluating digital assets. 52% said market cap, liquidity, and regulatory compliance were the most important. 48% said that past price performance and trends help influence their decisions, while 43% noted staking and yield opportunities for passive income. 41% said that they pay close attention to the team and developer activity, while 40% said that they're influenced by a crypto's institutional or corporate adoption. Only 39% said that it was the underlying tech and the use case as the most important factor, making it the lowest score. Next, the report explains that, quote, investors prefer digital asset products like ETFs and trusts for security and regulatory compliance. More specifically, 28% of investors said that they prefer crypto ETFs or trusts, while 24% prefer traditional brokerage platforms that offer crypto. Elsewhere, 21% prefer to use centralized exchanges, 16% prefer to use custodial investment platforms through financial advisors, and just 10% prefer to use a decentralized exchange. On top of that, 35% of respondents said that security and regulatory compliance are the primary drivers for choosing a specific investment platform. Now, the next section takes a closer look at how investors keep themselves informed about the crypto space. Notably, the report states that, quote, despite their self-education efforts, there is still some hesitancy to invest due to a lack of reliable information. Incidentally, this lack of reliable information is precisely why the Coin Bureau was created. In any case, 65% of investors said that they have hesitated to invest into crypto in the past due to a lack of education or reliable information, while another 29% said that they invest cautiously, but they want better insights. Only 6% of investors felt that they are well informed in their crypto trading decisions. That's actually insane and probably not far off from most retail investors. When asked what made them most uncomfortable, 46% cited tax implications, security, and best practices for protecting their assets. 43% pointed to regulatory impacts on crypto investments, while 42% struggled with evaluating and understanding different cryptos. Additionally, 41% highlighted risk management strategies, 39% found DeFi and staking just so difficult to understand, which honestly, it is. The report then notes that there is an appetite for investors to learn more about different aspects of crypto. 53% said that they wanted to learn more about market analysis and investment strategies, and 51% said that they wanted beginner-level guides. 50% also said that they wanted a better understanding of regulatory compliance, technical analysis, and trading indicators. Meanwhile, 48% said that they want better education on risk management strategies and security best practices, while 36% would like to learn more about DeFi, staking, and yield farming. Respondents were then asked how they stay informed with the digital asset space. 53% said that they use financial news websites, blogs, or newsletters. 50% said that they use market analysis tools and platforms, while 45% said that they consume podcasts, videos, industry journals, or publications. 44% said that they keep up to date with an organization's website or newsletter, while 38% said that they use the newsletters or websites of regulatory agencies. Meanwhile, 36% said that they have discussions with colleagues or network with their peers to stay informed. Now, the final section of the report looked at the roles of financial advisors, who are used by a whopping 88% of surveyed investors. Additionally, 78% of people who have yet to invest in crypto said that they would use an advisor if they did, and 93% of sub-high net worth investors said they're more likely to invest with an advisor. In fact, when it comes to getting accurate crypto market insights, 58% of surveyed investors said that they trust a financial advisor or certified professional the most, Respondents also said that they most prefer to learn through one-on-one consultations with their financial advisor at 49%. Meanwhile, 46% said that they prefer to learn about crypto through in-depth video tutorials or courses, and 44% said that they prefer articles and blogs, while 43% said that they prefer a more hands-on approach. What's interesting is that 82% of investors said that they would be more inclined to work with a financial advisor who could guide them on digital assets, and 49% said that they're actively seeking out an advisor with crypto experience. Moreover, 55% of potential clients say that it's, quote, extremely important that advisors have digital asset experience, and 51% said that they would seek an advisor specifically for crypto education. When asked about advisors' roles, 54% of investors said that they should be able to provide access to secure, compliant vehicles like ETFs or trusts, and manage portfolio allocations and risk strategies. 51% said that advisors should assist with custody and best practices, while 49% expected tax and regulatory guidance. 47% also said advisors should offer education on blockchain and digital asset fundamentals. 46% said that they should provide due diligence into specific projects. The report also notes that 52% of high net worth investors value secure custody and asset protection recommendations more than any other counsel from their advisors. And finally, the report adds that, quote, investors are wary of advisors who recommend products without explaining the risks and those who lack personal experience in digital assets. Notably, 29% of investors felt this way. Moreover, 22% of investors considered it a red flag when advisors have outdated views, and 16% are wary of advisors who have zero formal training in digital assets. With all of that said, there's just one question remaining. What does all of this mean for the crypto market? Well, it's pretty clear that crypto adoption among affluent investors is on the rise, but it's also clear that the wealthiest among us don't want to go at it alone. To be fair, this does make sense when you consider that the stakes are so much higher for these guys. I mean, consider that if crypto falls by just a few percentage points, this could potentially mean losing hundreds of thousands of dollars at a stroke. As such, many affluent investors are dependent on financial advisors before they enter the space. However, something else that's obvious from this report is that there's a clear shortage of financial advisors with crypto knowledge. This could actually be a huge opportunity for advisors themselves, since whoever can fill that gap in the market is likely to enlarge their client base. And this could actually be a hidden catalyst that no one is paying attention to. Take for a second to consider how much money is sitting on the sidelines, just waiting for the go-ahead from financial advisors. As soon as these advisors become more knowledgeable and give the thumbs up, we're all but guaranteed to see a tsunami of capital hitting the crypto markets. Based on the responses from this report, it seems that DeFi and RWA cryptos could see serious adoption if that were to happen. And that's simply because there is an appetite for tokenized assets and also the ability to earn a yield. The only problem is that there's also a lot of negativity when it comes to crypto's reputation. Sadly, even with all of the bullish developments in recent months, crypto still has a huge image problem. Scams and fraudulent activity are still very much a problem, which is bound to put off pretty much anyone with a lot of cash to lose. Thankfully, though, crypto regulations are heading in the right direction. At the time of shooting, the Genius stablecoin bill has been passed by the Senate, and it's simply awaiting consideration of the House of Representatives. The next focus after that is the Clarity Act, which focuses on market structure legislation. But even with these regulatory developments, we probably shouldn't expect to see capital hit the markets overnight. It'll probably be a while, honestly, before a lot of these bad memories from crypto's earlier days are forgotten by these affluent investors and also by financial advisors. Put simply, it's gonna be a while before these big investors start pumping our bags. But this is actually good news because this gives you plenty of time to prepare for those explosive rallies before they happen. So in the meantime, stay engaged, sharpen your research, and scout for that next 100x gem. Then, when the capital does start to flood the market, you'll be ready to ride the wave to new all-time highs. Okay, so if you enjoyed this video, definitely smash that like button and subscribe to make sure that you do not miss the next one and show us some love. This is my first video, so I would really appreciate it. And also, if you want to learn more about Wall Street's involvement with crypto, check out the video right over here. And if you want to see how much the market reacts to leverage, then you could check out the video right over there. Anyway, thank you so much for watching. My name is Louis. Thank you again, and I'll see you next time.